Alright guys, what's going on? Hopefully you can hear me well because it is quite windy where I am. Today it's going to be a banger. We're going to be going over how to find daily bias correctly and why yours keep failing. So bro, honestly, let's just get straight into it. So you got to understand, right, the market moves in two ways. It literally hunts liquidity. That's like the branch of it, right? So the two ways that it does that is it takes out trader stop losses. So you know when you enter a trade, if you're trading a retail strategy, um, then you'll notice that you get liquidated a lot, right? It's because the algo knows where your stop loss is. That's the first way. Um, the second way is by rebalancing to inefficiencies, or you can call it FVG, whatever you want to call it. Yeah, let's just get straight into it. So look, you can see. I'm sure a lot of you guys already know this, but the market is literally fully run on liquidity. Like you can just spot one right here. Here, trader stop losses are here, right? Because look, there's for example, retail strategies. What I mean by that is like break and retest, support and resistance. I know I trade break and retest, but I trade it with the liquidity concept. So, yeah. So you can see trader stop losses, they would enter at this demand zone, right? For example, they would have their stop loss right here. So their stop losses are here. So for price to move up, it's going to have to take it. Look what it does. Price perfectly takes it. Why do you think it's so perfect? Why do you think it comes right below it and then just shoots straight back up? It's not a coincidence. And literally on the example that we was on, watch this. So this low right here gets created, and then it gets liquidity split. Why do you think it's so perfect? Why does it come here, just under this, yeah, right, and then it shoots right back up? It's literally because price moves liquidity to liquidity. It's called draw on liquidity. The draw on liquidity is where price wants to go. Okay, so let's say the draw is this low, yeah, because we're moving down, we're trending down, we're breaking structure to the downside. The next draw would be here. Like let's say price is here, the next draw would be here, and the long-term draw would be here. Okay, this is for example. So for price to do that, it's going to have to take some sort of liquidity, right, from the buy side level to move down. Okay, so you can see here price decided to take out this, right? Also, the way that you identify liquidity sweeps is when there's no displacement through it. So over here you can see that there's no like fair value gap that goes through it, right? It's just like a doji, and it slowly goes through it and then it shoots straight back down. Yeah. Let me just quickly show you what displacement is and what a liquidity sweep is. So, liquidity sweep is literally when price wicks it, okay? So, here's our... Wait, let me just put my thing there. Oops. Let me put my thing here. So, price comes to the level, it doesn't break below it. It can body close over it, that's fine. But the only problem when it displaces through it. Displacement is when a fair value gap is formed through it. So let's take this one for example, this low right here. So price breaks below it, right? It body closes below it. Okay, that's fine. At this point, we're not sure what's going to happen. But as soon as this candle is created, that forms a bearish FVG through it. This is displacement, clear displacement. Alright, now that you know what displacement is, an inducement or liquidity sweep is when, look, so price can close below it if it wants to. But the main point is that it will wick below and body close above it. So look how many wicks it created here. So many. All the bodies close above it, and then it shoots up. Yeah, that's a liquidity sweep right there. A perfect example. But you guys should backtest this. It happens everywhere, every second in the market, on the 1 minute, 1 hour, 4 hour, daily, every single time frame. Look, there's just one right here. Yeah. There's another one right here. You know, so I hope you can see this pattern right here. Every time price wants to move down, right, or whichever way it wants to move, it's gonna have to take some sort of liquidity. A sweep right here, a sweep right here, sweep here, before it wants to do some sort of big move. Okay, that's the first type of liquidity hunting. Okay, the second one is fair value gaps. When price is ranging, right. For example, look on the hourly, right? You know how I said before a big move, yeah? Before a big move like this, before a big move like this, before a big move like this, there's always a liquidity sweep, right? Okay, so let's say price is in the middle over here. Price is in the middle over here. It's gonna want some more liquidity, right? Yeah, so how does it get that liquidity? So it could sweep again, but that's not really likely to happen. So what it usually does is it taps back into fair value gaps. So look, there's just so many everywhere. By the way, on all time frames this happens. It's fractal. happens on all time frame. Look, it comes back to the liquidity area. By the way, fair value gaps hold liquidity because it's inefficient price. It's very fast, impulsive price action. It has to come back and rebalance. Okay, so price comes back, taps into the fair value gap, and then continues again. Another example. Let me try find right here. Price moving downwards, taps back into the fair value gap, moves down a bit. Okay, over here, that's happening right now. Price moves downwards. We need more liquidity now. What's it doing? It's gonna tap back into this fair value gap, right? It's just everywhere. Look, let me show on the 4-hour. So, oh, that's all-time highs. Let me go to a more cleaner price section. Okay, so over here, by the way, brokers are different, but this was probably, yeah, this was a liquidity. So look, price swept it because it needed liquidity before it could move higher. Okay, so now that we're in like some sort of middle of the range, we're going to need more liquidity, but it can't really sweep anything right here. It's not going to go all the way down here, is it? Otherwise it will just keep on going. So it rebalances to an FVG. What does it do? Goes to this FVG. Oh my god, you see how perfect, look, just look how perfect it is. So this is the bottom of the fair value gap, yeah? Let me just mark it out with this line. Bottom of the fair value gap. Look how perfectly the body respects it. It doesn't close below it. Can't make this up. This is how price moves. When you incorporate this on the higher time frame, you're going to be reading daily bias so well. So now that you are familiar with these two ways of how price moves, essentially, the next thing is draw on liquidity. Now this is a really hard concept to kind of explain. Draw on liquidity is basically the next point of liquidity that price is trying to reach. Do you get me? So, for example, let me go on to the US 30, the Dow. Okay. Let me delete this. Okay, so what can we see here? Price has recently, well not recently, that's probably a week or two ago, taken out this high. Body closed above it, no displacement, okay? Because look, it swept right after. So this inducement, right? After this inducement, where are we looking for price to go? Probably, at this point we're still not sure. We want at least one body close below. So at this point, like, where do we think price is going to go? Well, the next liquidity point, the point of interest of where a lot of money is here, okay? This is the draw because it's the next point of liquidity, okay? When price reaches points of liquidity, we're not sure. We either wait for displacement or we wait for a sweep of that low. So price approaches this level, right? We're waiting for some sort of sweep or displacement. In this case, we get displacement because look, FVG and body close below, it doesn't respect it, okay? So we displace past this. Now we're still looking for shorts, okay? We're still looking for shorts. Price wants to come back to our fair value gap right here. Remember, this is the daily. Come back to our fair value gap. Get orders, get liquidity before it can move to the downside again. Now, where's the next draw on liquidity? It's the next low, isn't it? The next low. Remember, we're on the high time frame. If I go into the 4-hour, you'll see. Look, so on the daily, it tapped into a fair value gap. We're in a fair value gap right now. So the next low would be here. This is the next draw. So at this point in time, I'm looking for sells still. I'm still looking for sells. Alright, oh wait, let me turn back the heating on. Alright, my bad. So, yeah, so this was for current price. Let me try find some hindsight examples. So, let's see. US 30 ain't even clean, to be honest. So ugly. And yeah, this is all chopped up. We're gonna have to stick to NAS. We love NAS. So, alright. What can we see? We can see a nice displacement or break of structure or whatever you want to call it, yeah? We'll call it a chotch. Okay, so price breaks it, displaces from it, right? Okay, and then price comes all the way back up, retests our level, and remember there's also a fair value gap here which stayed unfilled, but depends on the broker. I reckon another broker probably tapped it. Let's just say it tapped it, right? It tapped it, collected its orders. Now it wants to move back down, because remember we displaced to the downside. So where would the next draw on liquidity be? Right there, this next low. Let's say for this example, yeah, a longs example, it came all the way down to this draw, it took it, it induced it, and now what's our next draw? What do you guys think our next draw is? I'm thinking up here, but let me see. I'm thinking up here, but it also could be, let me go to the lower time frame. It also could be some sort of fair value gap here, because remember we did displace this low. So after displacement, we always look for fair value gap retrace, right? So it may not be this. It depends how this fair value gap gets respected, and if it does. All right. Also, guys, in trending markets, yeah, just look how people say in trending markets it performs break and retest. Yeah, that's right. But if you want to have it more precise, if you wanna know which level would actually hold or which is stronger, then you should probably use FVGs, especially on the higher time frame. Look at this. Look how perfect it is. It respects it very nicely. Like, go and back test this, go and full test it, whatever, and yeah, you'll see. Let me see. This is actually a nice example, guys. Look, so price breaks, displaces to the downside, right? Remember, on the daily, it displaced to the downside through this low. Okay, now it came all the way back up. By the way, this was a generated low right here. Right here was a generated low because it knows price wants to take it later on at price. Okay, so it comes all the way back up, collects more orders from this chart, and probably fills some fair value gaps. Yeah, as you can see right here, and probably on the daily, maybe the weekly, and then wait, let me in fact check. Did it fill any on the weekly? Not really. Had this big gap though. Okay, so they came all the way up here, generated this high, it swept it, and then it dumped, kept on displacing. And remember, the next draw is always the next low. When you come to this low, yeah, you should always take off your positions, because you don't know whether it will liquidity sweep it or it will displace it. In this case, it liquidity sweeped it. Imagine if your TP was around here and you didn't take your take profit. All that is gone. Yeah, you probably would have got stopped out at break even or something. So always take your profit where the next draw of liquidity is. By the way, guys, a good example of what happened on Thursday, I think. Everyone thought that, I think I went over this before, everyone thought that it was sells around here. I was like, no, why is everyone looking for sells for? Like, it just swept this low. I go into the 4 hour, I see all these wicks. I'm like, prices, I think it was this candle right here, this grey one. People are still thinking shorts. I was like, nah, I see longs for now, but it depends if it displaces. Like, you guys just gotta wait. You have to wait to see displacement. You don't know if it's going to be shorts or longs yet. I was thinking longs because I saw this rejection from the level and a liquidity sweep. And yeah. And then it broke the structure. We can use this as a retest level, chart, longs. But yeah, I didn't trade Friday because too much chop. But yeah, guys, I hope this video helped. Let me know any improvements I can make in the comments, please. Or any video ideas. And yeah, guys, hope you enjoyed.